Welcome to the Compliance Officer's Playbook podcast. Today we're diving deep into the EU's new crypto rule book. You know the markets in crypto assets regulation, or as most people call it, MiCAR. MiCAR aims to harmonize crypto rules across all 27 EU member states. So yeah, think of it as like a whole new era for crypto in the EU.
It really is, yeah. For a market that's been operating with like a patchwork of national regulations, MiCAR is bringing a level of standardization we just haven't seen before.
Definitely. And for all you compliance officers out there listening, this is, well, a whole new ball game. And that's why we're here. We're going to unpack what MiCAR means for your business, like from the challenges to the opportunities. What do you think are some of the biggest things compliance officers should be thinking about at like a high level?
I think one of the most significant aspects of MiCAR is its focus on crypto asset service providers. We call those CASPs.
CASPs, got it.
Yeah. And these are the businesses at the heart of the crypto ecosystem, like your exchanges, your custodians, wallet providers,
Yeah.
even certain advisors.
So if you're a CASP operating in the EU, MiCAR is about to change your world.
I think that's a good way to put it.
So what's like the first thing CSPs need to know? What's like, top of mind?
Authorization. I mean, that's really it. Under MiCAR, CASPs need to be authorized to operate. It's not a free-for-all anymore.
So true.
It means meeting a stringent set of requirements, to prove you're a responsible and trustworthy player.
It's like getting a special badge to operate in the crypto world.
Yeah, exactly.
What kind of hoops do CSPs need to jump through to get authorized? What does that look like?
Well, they'll need to demonstrate robust security measures, first and foremost, to protect client assets.
That makes sense.
Think about things like strong cybersecurity protocols, secure storage solutions, and insurance coverage.
So they need to prove they can keep those digital assets safe from hackers and other threats.
Exactly.
Okay, what else?
Capital adequacy is another big one.
Yeah.
CASPs need to have enough capital reserves to withstand potential losses. This is all about ensuring financial stability and protecting investors.
It's like having a financial cushion to like absorb any unexpected shocks.
Right, exactly.
And of course, there are rules around conduct and transparency too, right? I mean, you can't get away from those in the financial world.
Of course not. That's a key part of this whole thing. MiCAR sets clear standards for ethical behavior and requires CASPs to be upfront about their operations, fees, and risks. Transparency is just key to building trust, both with clients and with regulators.
Now, all of this sounds like a lot of work and expense for CASPs, especially smaller ones. Could this lead to like a consolidation in the market? What do you think?
It's definitely a possibility. I mean, we might see smaller CASPs struggle to keep up with the compliance costs, and then maybe get acquired by larger, more established firms.
Interesting. So MiCAR could reshape the competitive landscape of the crypto industry. Like we could see some big shifts happening.
Yeah, I think that's fair to say.
Are there any, silver linings for CASPs amidst these challenges? Like, is there anything good that comes out of all of this for them?
Absolutely. I mean, one of the biggest benefits is increased investor confidence. When you have a regulated market with clear rules and safeguards, it makes investors feel more comfortable putting their money into crypto.
That's a really great point.
It's like having a seal of approval from the EU,
Yeah.
signaling that these CASPs are playing by the rules.
Right. Could this attract more institutional investors, do you think? Like the ones who have been hesitant to enter the crypto market?
Precisely. I think we could see a wave of institutional investment flowing into the EU's crypto market as a result of this, which in turn could fuel innovation and drive further adoption.
So while MiCAR presents challenges, it also creates opportunities for growth and maturity in the industry.
Yeah, it's kind of a two sides of the same coin situation.
Right. Okay. Now, let's shift gears a bit and talk about stable coins. These are getting a lot of attention under MiCAR. Why the intense focus on stable coins, do you think?
Well, I think you have to remember the collapse of Terra USD.
Yeah.
That event sent shockwaves through the entire crypto ecosystem. I mean, really highlighted the potential systemic risks posed by stablecoins.
Right. It raised concerns about their stability and like the potential for widespread disruption if a major stablecoin were to fail.
Exactly.
So MiCAR is taking a proactive approach to mitigate those risks.
That's right. MiCAR is introducing strict rules specifically for issuers of e-money tokens. Those are EMTs and asset reference tokens, ARTTs. Those are the two main types of stablecoins.
What's the difference between those two, EMTs and ART?
Sure. So EMTs are pegged to a single fiat currency, like the euro. Think of them as digital versions of traditional money. Arts, on the other hand, can be pegged to a basket of assets,
Okay.
including other currencies, commodities, or even other cryptocurrencies.
Oh, RTs are more like a diversified portfolio.
Exactly, in tokenized form.
Got it. What are some of the key things stablecoin issuers need to do to comply with MiCAR? Like, what are the biggies?
Well, one of the most important requirements is authorization.
Okay.
Just like other CASPs, stablecoin issuers will need to obtain specific authorization from their national regulator before they can operate within the EU.
So another badge to obtain, but this was for the stablecoin crew.
Right. And another critical mandate is reserve requirements. MiCAR requires stablecoins to be fully backed by reserves held with regulated custodians.
So if a stablecoin is pegged to the euro, the issuer needs to have enough euros in reserve to back up all the stablecoins in circulation.
Exactly.
It's like a safety net to ensure they can maintain their pegged value.
Precisely. And these reserves need to be highly liquid, meaning they can be easily accessed and converted if needed to meet redemption requests. MiCAR is all about transparency, too, with stablecoins.
What kind of transparency? Like, what does that actually mean in practice?
Stablecoin issuers need to provide clear and detailed disclosures about their reserve composition. Their risk management processes, their overall financial health. This helps investors understand what's backing their stablecoins and assess the risks involved.
So MiCAR is really bringing stablecoins under a microscope.
Yes, it is.
What are some of the potential benefits of all this regulation, though, for stablecoin issuers?
I'd say increased trust and adoption are two of the biggest opportunities. As stablecoins become more regulated and transparent, we could see them becoming more widely used for everyday payments and other financial applications.
Interesting. So MiCAR could actually pave the way for stablecoins to become a more mainstream form of payment.
It's definitely a possibility, but there's a potential hurdle for stablecoin issuers outside the EU.
The international players. What's the catch for them?
Well, they'll face some significant barriers if they want to offer their stablecoins within the EU. They'll need to comply with all of MiCAR's requirements, including the authorization and reserve mandates. And that, might not be feasible for everyone.
So we could see a situation where some stablecoins become very popular and widely used within the EU, while others struggle to gain a foothold.
It's a scenario worth considering, and this brings us to another key aspect of MiCAR, which is passporting rights.
Right. Okay. Passporting rights are basically a game changer for CASPs that are authorized to operate within the EU. Can you explain how that works?
So imagine getting a single license that allows you to offer your services across all 27 EU member states.
Wow.
That's the power of passporting rights.
That sounds like a dream come true for CASPs, especially those looking to expand. What are like the main benefits?
Well, for starters, it reduces the regulatory fragmentation that we've seen in the past. Firms no longer have to navigate 27 different national frameworks. It just simplifies things immensely.
Less red tape, lower costs, wider reach. Sounds like a pretty sweet deal.
It is. But there are still some challenges. To take advantage of passporting rights, a firm needs to first obtain authorization in their home member state.
So they need to get that initial badge of approval we talked about earlier.
Exactly. And even with passporting rights, a CASP still needs to notify their national regulator before they expand their operations into a new EU country.
So there's still some oversight and due diligence involved.
Right. But overall, passporting rights will be a significant competitive advantage for well-regulated crypto firms that are looking to expand their footprint across the EU.
It's like unlocking a whole new level of the game. Now, MiCAR isn't just about streamlining processes and opening doors, though. It's also about cracking down on bad behavior. Tell us more about that.
Absolutely. MiCAR introduces some very robust rules aimed at preventing market abuse, like insider trading and market manipulation.
So it's building on existing frameworks to ensure a level playing field and protect investors. Can you give us some specific examples of the types of market abuse MiCAR is targeting?
Certainly. Think about things like pump and dump schemes, where someone artificially inflates the price of a crypto asset and then dumps it for a quick profit, leaving other investors holding the bag.
Right. That's a classic market manipulation tactic.
Yeah.
What else?
Insider trading is another big one. This is where someone uses non-public information to gain an unfair advantage in trading. MiCAR is cracking down on these practices by requiring CASPs to have systems in place to detect and prevent market abuse.
What kind of systems are we talking about?
They'll need to implement sophisticated surveillance tools to monitor trading patterns, flag potential red flags, and generate audit trails. And they'll need to have clear policies and procedures in place to address any instances of market abuse.
So if you're a CASP operating in the EU, You're going to need to have your compliance game on point.
No doubt about it. The consequences for noncompliance will be much more severe under MiCAR.
Right. MiCAR is definitely creating a much more mature and regulated environment for the crypto market in the EU. It's a whole new ballgame.
That's the goal. And while it does create challenges for CASPs, it also has the potential to foster a more stable and trustworthy market, which could ultimately attract more institutional investment and lead to greater adoption.
Well, we've covered a lot of ground in this first part of our MiCAR deep dive.
We have. It's a dense topic.
It is.
A lot to unpack.
We've looked at the authorization process for CACPs, the implications for stablecoins, the benefits and challenges of passporting rights, and the crackdown on market abuse. It's a lot. But hopefully, our listeners are starting to get a sense of the scope of MiCAR and what it means for the future of crypto in the EU.
I hope so. It's a landmark regulation, and I think it's going to have a profound impact on the industry.
I agree, and I think it's just the beginning of a new chapter in the story of crypto and regulation. Welcome back to the deep dive. In part one, we covered, the broad strokes of MiCAR, kind of like a high-level overview. Now let's zoom in on what this means for, well, you, the compliance officers on the front lines. You're the ones who have to actually make this stuff happen.
Right. It's one thing to talk about the theory, it's another to put it into practice, and that's what we're here to talk about today.
Okay, so let's get into, the practicalities. You're a compliance officer at a crypto firm, let's say. Where do you even begin? How do you even start preparing for MiCAR?
Yeah, it can feel overwhelming.
Totally. So much to think about, right?
Absolutely. I mean, the first step, I'd say, is to really get under the hood of MiCAR itself. Don't just skim the headlines. Really familiarize yourself with the specific requirement that apply to, well, your type of CASP.
Right, because a crypto custodian will have different obligations than a crypto exchange.
Precisely. One size does not fit all in the MiCAR world. Once you have a solid grasp of the rules, though, I think the next step is a gap analysis. You got to compare your existing compliance program to MiCAR's standards.
Essentially figure out where you're falling short and what needs to be, beefed up.
Exactly. This might involve updating your risk management framework, bolstering your KYC and AML procedures, maybe even implementing entirely new systems for transaction monitoring, to comply with those market abuse regulations we were talking about.
Yeah. For some firms, this could mean a pretty significant overhaul of their operations. It's not just tweaking a few things here and there.
It could, but it's important to remember that this isn't just about checking boxes, right? I mean, it's about building a culture of compliance within your organization.
So it's not just the compliance officer's job. Everyone needs to be on board.
Exactly. That might involve training your staff on MiCAR's requirements, developing clear compliance policies and procedures that everyone understands, establishing strong internal controls.
Now, some people argue that all this regulation could stifle innovation in the crypto space.
Right.
It's that classic tension between regulation and innovation. What do you think about that?
It's a valid concern. I mean, navigating complex regulations can be burdensome, especially for startups and smaller players who may have limited resources. It's like adding another hurdle to an already challenging race, right?
Yeah. Could MiCAR inadvertently hinder the development of new and groundbreaking crypto projects? Do you think that's a possibility?
It's possible. I mean, it's definitely something to watch out for, but I think it's important to remember that regulatory clarity can also be a catalyst for innovation, right? When you have clear rules of the game, it reduces uncertainty and risk.
Which makes investors feel more comfortable?
Exactly. And when investors feel more comfortable, they're more likely to invest.
Right. So you get more funding flowing into this space.
Exactly. And that can fuel the development of new technologies and applications.
So it's a bit of a balancing act. You get a more stable and regulated market.
Yeah.
But you might also see a shift in the types of innovations that emerge.
Right. Instead of the Wild West style experimentation we've seen in the past, we might see more innovation that's focused on building within the regulatory guardrails.
Interesting. And it's not just the EU that's taking notice of crypto. How does MiCAR fit into the global regulatory landscape?
Right.
Is the EU leading the charge here?
I think it's fair to say that the EU is at the forefront of crypto regulation. MiCAR is one of the most comprehensive frameworks we've seen globally. And I think it's setting a precedent that other jurisdictions are watching very closely.
So we could see a ripple effect
Mm-hmm.
with other countries adopting similar regulations.
It's certainly possible. We're already seeing increased regulatory activity in the U.S. and Asia, in other parts of the world, really. I mean, the global regulatory landscape for crypto is rapidly evolving.
What does this mean for compliance officers, though? I mean, it sounds like they need to be incredibly adaptable to be able to keep up with all of these changes.
Absolutely. I think the key is to stay agile and informed. Like the rules of the game are changing, and compliance officers need to be prepared to adapt.
What are some resources or strategies that compliance officers can use to stay ahead of the curve?
Engaging with industry groups and regulatory bodies is crucial. Attend conferences, participate in webinars, network with other professionals in the field.
It's all about sharing knowledge and best practices, learning from each other's experiences.
Exactly. And don't underestimate the power of, good old-fashioned legal research. Stay up to date on the latest regulatory developments, both within the EU and globally.
Like set up Google alerts, subscribe to industry newsletters, make sure you're getting those daily updates. Knowledge is power in this rapidly changing landscape.
Absolutely. And consider investing in professional development opportunities, too. I mean, there are specialized courses and certifications that can help you deepen your understanding of crypto regulation.
It's like leveling up your compliance skills to match the complexity of the evolving regulations. Okay, now let's talk about the role of technology. How can technology help compliance officers navigate MiCAR's requirements?
I think technology is going to be a crucial ally for compliance officers in this new era. Think about all the data that CASPs need to collect and analyze. For KYC, for AML, for transaction monitoring, it's a massive amount of information.
It would be nearly impossible to manage all of that manually.
Exactly. And technology can automate much of this process, making it more efficient and accurate. Instead of manually sifting through mountains of data, you can have algorithms do the heavy lifting.
Right. And that frees up compliance officers to focus on more strategic tasks, like risk assessment and policy development.
Precisely. And we're seeing the emergence of incredibly sophisticated technologies that can further enhance compliance efforts. Take blockchain analytics, for example.
Blockchain analytics. What can blockchain analytics do for compliance?
Blockchain analytics tools can actually trace transactions across the blockchain,
Yeah.
helping to identify suspicious activity and track the flow of funds.
Oh, wow.
It's like having a digital detective on your compliance team.
That's amazing. Sounds like science fiction, but it's happening right now.
It is. And artificial intelligence is also playing a growing role in compliance. AI can be used to develop risk scoring models that can help CASPs assess the risk of their clients and transactions more effectively.
So technology is not just about automating tasks. It's about gaining deeper insights and making more informed decisions.
Absolutely. It's about harnessing the power of technology to build a more robust and resilient compliance program.
It seems like MiCAR is really pushing the crypto industry to step up its game in terms of compliance, like it's raising the bar significantly.
Yeah, I think that's a fair assessment.
What's the overall message you'd like to leave our listeners with then, as we kind of wrap up this part of our discussion?
I think the key takeaway is that MiCAR represents a major turning point for the crypto industry in the EU. It's a shift towards a more mature, regulated, and transparent market, and that's a good thing overall.
Welcome back to the final part of our MiCAR deep dive. I feel like we've laid the groundwork, explored the challenges, and now it's time to get even more specific. So in this part, we're going to break down what MiCAR means for different types of CASPC. Like, let's get granular. Let's start with the heavy hitters, the crypto exchanges.
Yeah, exchanges are really at the heart of it all. They're like the central hubs of the crypto world, facilitating the buying, selling, and trading of crypto assets. So yeah, they're definitely going to be significantly impacted by MiCAR. No doubt about it.
What are some of the key things exchange operators need to keep in mind? Like, what should they be focusing on?
I'd say one of the biggest areas of focus will be market integrity. MiCAR sets a high bar for preventing market abuse. Like, we're talking about things like insider trading and manipulation.
Right. So exchanges will need to have incredibly robust surveillance systems in place to detect and report any suspicious activity. What kinds of systems are we even talking about here?
We're talking about sophisticated tools that can monitor trading patterns in real time. Like, they can flag potential red flags like sudden price spikes or unusual trading volumes. And they have to generate audit trails that can be used to investigate any suspicious behavior.
So it sounds like exchanges are going to need to invest heavily in technology to meet these requirements.
Oh, absolutely. I mean, technology is going to be key here. But it's not just about technology either. They'll also need to have clear policies and procedures in place, to ensure they're complying with MiCAR's market abuse provisions.
Right. So things like strict Know Your Customer KYC and anti-money laundering AML protocols.
Yeah.
As well as robust conflict of interest policies to ensure fair trading practices. It's a lot.
It is. And let's not forget about those passporting rights we discussed earlier. I mean, how might those come into play for exchanges?
Yeah, passporting rights could be a real game changer for exchanges looking to expand across the EU. Being able to operate in all 27 member states with a single license would be a huge advantage.
Huge. Imagine the streamlined operations, the reduced costs, the ability to reach a much wider customer base.
It's like a whole new world of possibilities. But of course, to qualify for passporting, exchanges will need to meet MiCAR's strict authorization requirements in their home member state.
That's right. They need to demonstrate that they're operating at the highest standards of compliance before they can unlock those passporting benefits.
All right. Let's move on to another key player in the crypto ecosystem, the custodians. These are the firms that are responsible for, well, safeguarding those precious crypto assets, right?
That's right. Custodians, they hold the keys to the digital kingdom. And MiCAR places a huge emphasis on ensuring the security and integrity of crypto custody services.
Rightfully so. What are some of the specific requirements for custodians under MiCAR? Like, what do they need to be doing differently?
Well, one of the core principles is safeguarding client assets. Like custodians will need to implement incredibly robust security measures, both physical and digital, to protect against theft, loss, or unauthorized access.
We're talking like bank-level security for the crypto world.
Exactly. Multi-factor authentication, cold storage solutions, regular security audits, all of that. All of that and more will be essential for custodians to demonstrate they're taking security seriously.
And what about insurance? That seems like it would be pretty crucial for custodians, right? I mean, just in case.
It is. MiCAR requires custodians to have adequate insurance coverage to cover any potential losses of client assets. This provides an extra layer of protection for investors, just in case something goes wrong.
Smart. So MiCAR is really raising the bar for custodians in terms of security, risk management, transparency. Okay.
Yeah.
Now, let's not forget about stablecoin issuers. They're facing some of the most stringent requirements under MiCAR. Why is that? What makes stablecoins so special?
Well, stablecoins are designed to maintain a stable value, often pegged to a fiat currency like the euro or the US dollar. But the collapse of Terra USD, remember that?
Of course.
Yeah, that showed us that not all stablecoins are created equal. Some are much riskier than others.
Right. And MiCAR is aiming to mitigate those risks and ensure that stablecoins well live up to their name. Stable. How does it do that?
Well, first and foremost, stablecoin issuers will need to meet those strict reserve requirements we discussed earlier. This means having enough high-quality liquid assets to back up all the stablecoins in circulation.
So no more algorithmic stablecoins with flimsy reserves. MiCAR wants to see real assets backing those tokens.
Exactly. And transparency is also a major focus. Issuers will need to provide detailed disclosures about their reserve composition, their risk management processes, their overall financial health, all of it.
Yeah, it makes sense. This will help investors understand what's backing their stablecoins and make more informed decisions.
Okay.
For our final stop on this MiCAR tour, let's venture into the exciting world of DeFi.
Decentralized finance.
Yeah.
Yeah. This is where things get, well, particularly interesting and, frankly, a bit more complex from a regulatory perspective.
Because DeFi is all about cutting out the middleman.
Right.
No central authority, just code running on a blockchain.
Precisely. And that presents some unique challenges for regulators who are accustomed to dealing with traditional financial institutions with, clear lines of responsibility.
So how does MiCAR apply to this decentralized world of DeFi? Like, how do you even regulate something that's designed to be, well, unregulated?
That's the million-dollar question, isn't it? MiCAR doesn't specifically mention DeFi, but it does lay the groundwork for regulating DeFi platforms that perform similar functions to traditional financial institutions.
So if a DeFi platform is essentially acting like an exchange or a custodian, it could fall under MiCAR's scope, even if it's decentralized.
It's certainly possible. Regulators are still figuring out how to apply existing rules to this rapidly evolving space. It's kind of uncharted territory.
Yeah, it's a bit like fitting a square peg into a round hole. But I imagine this is going to be a major area of focus for regulators in the coming years.
Absolutely. The DeFi space is growing rapidly, and regulators are going to need to adapt to keep pace with the innovation.
Well, that brings us to the end of our deep dive into MiCAR. I feel like we've covered a lot of ground, from the broad strokes of the regulation to the specific challenges and opportunities it presents for different types of CSPs. It's a lot.
It is. It's dense.
We've explored the impact on exchanges, custodians, stablecoin issuers. We even ventured into the exciting but uncharted waters of DeFi.
We tried to cover it all.
MiCAR is definitely a game changer for the EU crypto landscape. It's a bold move for sure. And it sets a high bar for compliance. It ushers in a new era of regulatory oversight, I think.
Yeah, I think that's a fair assessment.
But it's not just about compliance either. I think MiCAR also creates opportunities for growth, for innovation, and for increased investor confidence in the EU crypto market. It's a complex and evolving landscape for sure. And compliance officers will play a crucial role in navigating this new frontier.
Absolutely.
Any parting words of wisdom for our listeners?
Stay informed, be proactive, and embrace the challenge. I think the future of crypto in the EU is bright, and MiCAR is a significant step towards creating a more sustainable and vibrant ecosystem.
I love that. A huge thank you to our expert for joining us on this deep dive into MiCAR. And to all of our listeners, thank you for tuning in. If you love this episode, become a paid subscriber today for $4.99 and get full access to all premium episodes packed with insights, stories, and value you won't find anywhere else. The link is in the show episode notes. And be sure to tune in next time for another insightful episode of the Compliance Officer's Playbook podcast.